Listen, I don't know how to trade stocks, man. I lost all my money on Robinhood.
I've always wondered, how do stocks work? First, we'd have to start off with what stocks are. The textbook definition is the capital raised by a business or corporation through the issue and subscription of shares. Now let's get this clear. Stocks and shares are terms that people use interchangeably without realizing, but there's one small difference between the two. Stocks are usually used more generally, while shares is more specific. When they talk about shares, it means they own a part of a company. But when you say a stock, it's often described as one or more companies. This is similar to squares and rectangles. You can call all rectangles squares, but you can't call all squares rectangles. In simpler terms, owning a share is like holding a fragment of one company, while holding stocks is holding fragments of multiple companies. Also, shares of a company don't just appear out of thin air from a public company. There's a process to how to start it. Stocks start off as companies that want to sell their public stock. Some companies are private, meaning they are not in the stock market and they do not sell any stocks. Some examples of private companies that don't sell stocks would include Burger King, VTOL, Trafigura Group, and Cargill. I honestly don't know a lot about these companies. I just looked up famous companies that were private and within the stock market. Anyways, when public companies do want to sell their own stock, they're called startup companies. A startup company usually starts off with 10 million authorized sales to share, but obviously this number can rise to crazy amounts like Apple, which is currently at 12 billion 600 million to 50 billion 400 million. That's a big range. Each company's shares have a number value, and this is usually shown on a graph that you can look up on Google very easily. Now, since my AP macroeconomics activity where we made a stock trading sheet and that Mike Reeves video that I watched, I've always wondered, how do these shares rise or drop? Shares have a very simple way to rise or drop, which is a concept I've learned in class: supply and demand. For a share to rise, you'd have to have a larger amount of people to want to buy the share compared to the amount of people that want to sell the share. Oppositely, if more people want to sell the share than buy the share, the price would drop. Remember, there's always a buyer and a seller behind selling or buying shares. But you may be thinking, why would you want to buy share 1 over share 2? When you're looking for a share to buy, you look for mainly one thing: how it would rise in price. A share doesn't only change with what people see in the price. Owning the share, said previously, is owning a piece of the company. So when seeing a company you own a share in do something horrible, ruin its image, would you still want to be part of its company? No, everyone would want to sell the share and leave. This would drastically lower its price. An example of this situation would be something I've seen in a show called The Boys. In one of the episodes, the company, Vought, gets exposed for their crimes. This leads to a scene where Vaught's employees are panicking about their share price.
20% in the last 15 minutes. Hit its 19, start a buyback.
Yes, sir.
Jesus, what about the pharmaceuticals? Pfizer's circling. This made it a lack of ethics.
Investor lawsuits, breach of fiduciary duty, non-disclosure.
Grave exposure for fraud, assault, infliction of bodily harm, all policy exclusions, no coverage.
We have two options. Option 1, deny. High risk, high reward.
But if we deny and they nail us, if there's a legit whistleblower, there's no coming back. That's bankruptcy, criminal charges, 10 to 15 for everyone in this room.
Option 2, mea culpa.
They've called it. Trading's halted.
January 2021. This is when GameStop started rising. This rise was due to two reasons. It was a very popular meme stock, pushed by influencers on social media. The other reason was it was very easy to be accessed by brokerages, such as Robinhood and Webull. These brokerages were revolutionary. Stock trading on their phones have never been a thing before. Anyways, those young traders would be called retail traders, who are people who don't trade for companies. They were influenced hard by social media to invest in GameStop. This actually led to the average age of retail traders to drop hard from this GameStop rush. New people around my age saw GameStop and thought, wow, we could get rich so quick. GameStop is rising, that's crazy. GameStop unironically went up by 8,000%. The hype started dying down around that time too. God. Suddenly, Dogecoin came around the corner. People thought, holy shit, this is the next Bitcoin. The whole perception of quick, easy, fast money was really hyped up around the time, all because of the Bitcoin climb. Dogecoin went from a penny stock to 10 cents. Everyone was believing in it. Social media influencers were flexing their Dogecoin and encouraging people to invest into it. This was even during COVID. No one was able to make that much money because no one could go outside. Combining all these factors, it led to everyone following in through crypto stocks, thinking easy and quick money. Then, Dogecoin, GameStop, Bitcoin, they all started losing heavy value at like 70 to 80%. This all ended up with a lot of new young retail traders who get scammed by brokers and mentorships paying thousands of dollars. They joined the statistic of 90% of traders lose money. But some of those new traders do end up staying, such as my friend Arvin, who are we just about to interview. This is my friend Arvin. He's 20 and he's been stock trading. So, how'd you get into stock trading?
I really got into stock trading with the big boom of GameStop. I don't know, many of you guys know, but GameStop had a really crazy rise from like a couple dollars to 100 something. And after that, it came down a little bit. And that's around the time I got into stock trading because people are like, GameStop is down, get in now. This is your chance to get really rich really quickly. And that spread all around social media and everything. And around that time was I want to say mid 2021, and I've been trading ever since then.
Okay. So that tells us how long you've been trading, so we got that. How do you stay updated with the market trends?
Stay updated with the market trends by just keeping up with them big world events and keeping up with the really big economic news. Keeping up with like the meetings. There's a website that shows you the big financial events that are happening every day, and I just stick with the really big stuff because that's what usually affects me the most, and not the smaller details.
Okay, so do you prefer short-term trading or long-term?
I prefer short-term trading, like day trading, because usually the longest I'll hold my position for is 3 to 4 hours. After that, I start reconsidering what I'm doing. And this is because I've only ever practiced trading in short times. I've only ever read about holding short-term trades. And the thing with short-term trades is I like to be really active in my positions. I like to always be watching it and that. And with longer trades that last from a day to even a week or a month, I can't be on my computer all the time watching the stock move up and down. And that gives me a lot of anxiety when I can't look, so.
Yeah, that makes sense. What advice would you give to someone who wanted to start trading?
I'd say if you wanted to start trading, you should practice first. Don't put real money down until about, at the very least, 6 months of trading. Practice trading with fake money. I made a mistake. I went straight into real money. I cannot tell you the amount of money I lost without embarrassing myself. Always practice with fake money first. For at least 6 months, I'd recommend even a year.
Wow. How do you know the best time to sell or buy the stocks?
So when you're trading, especially with short-term trading like me, the very best time to sell stocks is really hard to predict because you never know when the exact top will be or what the exact bottom will be. For me, I just look at how the stock moves beforehand. Usually I watch for about a day before the past 24 hours. I just look at how it moves, and from there I can like make an educated guess at how the stock will move when it reaches certain price levels, and that's how I usually trade. And then I'll sell or buy when when the price action tells me that it's met a good point.
Okay. Well, those are all my questions. Thank you, Arvin.
You got anything else or what?
No.
All right.
Thank you for the interview.